OMG, crypto's crashing. It's the end of the world. Just playing. In today's show, I'll be breaking down the latest Bitcoin technical analysis, quoting Max Kaiser. The MAGA agenda means efficiency and accountability to an economy and stock market that has known neither for 45 years. I'd expect a 66% pullback in the S&P 500 if Trump and Musk go full metal jacket on fraud, waste, and abuse. We'll be discussing why the market is tanking, which most likely has to do 100% with manipulation right now. We'll also be discussing Bybit CEO declares war against Lazarus after the 1.4 billion crypto hack. We'll also be discussing Meta Planet and El Salvador stack more of the biddy as the Bitcoin price slides now roughly 10% in the past day. We'll also be discussing SBF post for the first time in 2 years and the FTT scam token pumps. Well, it was probably until the dump. Even Trump coin is down to $13 here today. But anyways, also Ohio introduces a bill preventing state taxes on crypto payments. We'll also be discussing Bitcoin could be headed for 70,000 Goblin town on the ETF Exodus, according to Just Blaze. Arthur Hayes, and I got to give him respect because he was the only one calling for 80,000 for the past couple of weeks, and we're pretty close to 80,000 right now. He says we're likely to go down to 70. And quoting Ash Crypto, so you're telling me Bitcoin dumped more than 10,000 in 2 days without any major negative news? This is pure manipulation. All these big frickin' exchanges and market makers are liquidating people and making millions with volatility. It is the typical Wall Street playbook. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. But anyways, if you're new to the channel, very important to smash the likes. Go ahead, subscribe, then hit that bell icon. Turn on all notifications to receive daily premium crypto news alerts every single day, 7 days a week, even when the market's on tilt, like today, sub 88,000. Who would have thunk it? Besides Arthur Hayes. But anyways, let's kick it off as we do each and every day. Today is pod number 1916. I'm your host, JV. It's February 25th, 2025. Happy 420 markets. On tilt right now, as you can see, blood red. Bitcoin down roughly 7% on the day. Ether down 7%. XRP down 7%. The bulk of the market, Rex City. And that's no diddy. And checking out coinmarketcap.com. The current crypto market cap sits at $2.9 trillion. And the Bitcoin market cap is all the way down to $1.7 trillion. And we have roughly 216 billion in volume in the past 24 hours. So volume is up 100%. And checking out the Bitcoin dominance, we're back on a decline at 60% even. Ether dominance back on a decline at 10.3%. Now, is anything in the red? Or I mean in the green? Only a handful of projects. We got Story, Quant, and Celestia leading the pack as the majority of the alts correcting. And checking out the crypto bubbles. Man, not looking good whatsoever on the daily. And if we zoom out on the monthly, it's sad. 30, 40, 50, 60% losses across the board. And checking out the Crypto Greed and Fear Index today, we're back in extreme fear, rated at 25. And the silver lining here, the lower this number goes, the more likely of a pump. So we may be bottoming out soon. Yesterday was a 49, last week a 47, and last month a 73. Ingrid. And checking out the time chain calendar, gentlemen and ladies. We currently have, you can exchange one fiat monopoly dollar for 1,131 sats. So you got Bitcoin at a discount today. So it's a great buying opportunity. So seize the moment if you have any dry powder available on the sidelines. We're currently on block height, 885,277. And we have 164,723 blocks until the next halving of 2028. And if you don't know, now you know. Broskies. But yeah, let's dive into today's TA family, and then we'll pull up the live charts. Bitcoin enters technical bear market as the Bitcoin price drops 20% from the all-time high. Oh no. Yeah, that's right. Checking out right here the one-day chart. Bitcoin set a 15-week low at the February 25th Wall Street Open as US sell pressure added the Bitcoin price to the downside. TradingView showed Bitcoin trading increasingly close to 86. Now at its lowest level since November 13th, Bitcoin struggled to catch a bid as wary traders watched the aftermath of a mass liquidation event. 24-hour cross Crypto liquidations hit nearly 1.6 billion over 24 hours, with crypto market sentiment swiftly crashing to the extreme fear, which we're in today, rated at 25, as I shared in the Crypto Greed and Fear Index. So now down 20% from the all-time high just a month prior, Bitcoin entered the technical bear market, as noted by bar chart. The downside deviation below the range low of the reaccumulation range is now in progress. And Rec Capital produced a weekly chart, which you can see here, highlighting the key structures within the Bitcoin price action since the end of the last macro bear market, late 2022. And another post earlier in February acknowledged multiple such deviations, calling them outsized bargain opportunities. Another BTFD opportunity family. Quoting them here, long liquidations cluster heavily from 68 to 77,000. Short liquidations ramp up significantly to 103 to 138. Imbalance favors more liquidations above the price, the risk. Large long liquidation cluster below may act as support, but losing it can trigger a cascade. Target shorts could aim towards the 103 area. And covering macroeconomic triggers, trading firm QCP noted the topic of U.S. inflation trends had taken a backseat for the biddy, quoting them here. Zooming out, equities, fixed income, and gold have largely shrugged off the data points previously blamed for the broader market weakness, with Bitcoin remaining flat. They also added, recent Bitcoin demand has been driven primarily by the institutions like MicroStrategy, now known as Strategy B, financed through the equity-linked note issuances, with crypto-related issuance accounting for roughly 19% of the total issuance over the last 14 months. The market for such financing may be nearing saturation, potentially dampening institutional demand if the spot continues to stay muted. And quoting the high priest of Bitcoin, Max Kaiser, the MAGA agenda means efficiency and accountability to an economy and stock market that's known neither for 45 years. I'd expect a 66% pullback of the S&P 500 if Trump and Musk go full metal jacket on the fraud, waste, and abuse. Could you imagine the stock market getting liquidated 66%? I mean, clearly, then obviously the crypto market is not going to fare so well. I mean, Bitcoiners will be whole because one Bitcoin will always be equivalent to one Bitcoin, but that's why shitcoinery can get you wrecked. You get caught holding those bags and the market tanks like this, and some of those alts lose 90% of their value and they never return. That's what happens. Max also said everything not Bitcoin is a meme coin without purpose or viability. People used to think these alts had utility or intrinsic value, but now it's generally understood that none of these shit coins is anything more than a dirty meme coin. And also another tweet here, Max reposted this. I haven't even read it yet, but I'm going to read it to you right now. My two stats in the Bitcoin price action: half the institutions aren't buying Bitcoin to get long Bitcoin. They are here as market makers yield farming Bitcoin volatility. Here's simplified how it works. Let's say you had 100 million you need to use to create cash flow. You want to make a market with minimal risk and maximum reward. The best way to do that is to get delta neutral across spot and futures in a volatile marketplace. The more volatility, the better, because the higher the premiums paid on the futures. So you buy 50 million of Bitcoin, that puts you long 1x. You sell 50 million of Bitcoin, that puts you short 1x. This puts you delta neutral, aka regardless price action, the nominal value of your position stays 100 million. Why do it? What's left over? The premiums paid by the traders. The yield in TradFi ranges based on volatility between 10 and 20% APY. The yield in DeFi ranges on volatility between 10 and 60% APY. That's a lot more than the 4% you can get from the US Treasuries. That's the job of a market maker. Outperform the risk-free rate of return. Bitcoin volatility does that. But this is just basic 101 stuff. Financial games are played to maximize the profits, maybe even to accumulate as well via liquidation. How? By unwinding the position. If you're about to sell 50 million of the spot Bitcoin, you don't close your short. You sell first, and there is weakness. You sell aggressively. This can drive value into your short, which you close while you're pushing the price down. And ultimately, I'm not going to read the entire thing, but there's absolutely price manipulation going on by the market makers, and the winners 100% of the time, market makers and exchanges, which make money regardless of what you do on every transaction. Max also says volatility grabs attention, and attention is a valuable commodity, especially in this attention economy. Bitcoin converts volatility into the perfect money. Pay attention and get the biddies. Stack thy biddy. One Bitcoin still equivalent to one Bitcoin. Bitcoin maxis. No sweat. We're not losing any sleep over this. I'm just saying. This is live chart action Jackson. And as you can see, we're just above 88.8 at the time of the live stream. There's the 1 minute chart. We did bottom out, I think around the 86 range, but let me confirm that as we scale out the chart. Let's see where we're at for today. Bada boom, bada bing. Tracker ticker. Yeah, we actually hit 85.9 on Coinbase, the current bottom. 85,936 to be exact. This is the 1 hour chart. We do got a couple of green candles for the past couple of hours after bottoming out. We do have a bear target clearly also sitting at 78.9. There's some CME future gaps around that level as well. Obviously, this is not the futures chart, but I know in that level, that's why analysts are calling for it. And zooming out on the 4 hour, we also have a bear target sitting at 81,799. And zooming out from the 4 hour, quick look at the daily chart. It's going up forever, Laura. Unfortunately, there's not even any bull targets on here. There's 2 bear targets, one at 68.7 and a super bear at 49,000. And zooming out from the daily, taking a look at the weekly, we do still have the bull 124 cup and handle target. But obviously, we've been pretty bearish on the weekly for the past couple of weeks. And zooming out from there, take a quick look at the monthly. Unfortunately, February, big red candle formed unless we change course very fast, as this is the shortest month of the year, clearly. So most likely, we're going to close in the red. And if you don't know, now you know. Let's discuss the Bybit war. That's right. Bybit CEO declares war against Lazarus after the $1.4 billion hack. Fewer than 7 days after hackers removed more than $1.4 billion of assets from Bybit, the crypto exchange CEO vowed to take action against those responsible. All right. In the February 25th post, the Bybit CEO called on users to support a war against Lazarus, referring to the North Korea-affiliated group that stole funds from the exchange. February 21st, the CEO announced a bounty website in which those who froze illegally moved the funds would receive 5% of all the crypto as a result of their efforts. Pretty significant bounty. In fact, they said successful interceptions will be rewarded with a 10% bounty, potentially up to $140 million, because we're talking about a $1.4 billion hack. Quoting them here, "We have assigned a team to dedicate to maintain and update this website. We will not stop until Lazarus or the bad actors in the industry are completely eliminated. In the future, we will open it up to other victims of Lazarus as well." So if anyone has any insider info, let's go. Security sleuth Zach XBT identified Lazarus behind the February 21st hack that resulted in the removal of more than $1.4 billion of liquid staked Ether, Mantle staked Ether, and other ERC20 tokens. Bybit reported Feb 23rd the exchange replaced the stolen crypto, claiming Bybit was backed 100% 1-to-1 on the client assets. Firms will sometimes offer hackers a bounty to return the stolen funds and avoid potential legal issues. The CEO's call to eliminate Lazarus's efforts, however, could make the exchange a target for future attacks. Hackers tied to the North Korea were reportedly responsible for stealing more than $3 billion worth of crypto from the exchanges between 2017 and 2023. The Bybit hack, however, would represent the most expensive exploit in the crypto industry's history, so far exceeding the roughly $600 million removed from the 2022 hack of the Ronin Bridge. Blockchain security firm PeckShield reported in January hackers and scammers stole more than $3 billion through crypto-related activities in 2024, with phishing attempts the most costly. However, the company's data suggested the total number of the hacks and scams had been decreasing since 2022 and tapered off at the end of 2024. But one thing shall remain: hackers will continue to do what they do best: hack. The problem, I believe, was putting $1.4 billion in a single address or something remotely similar to that, because it's what we call a honeypot. And if the hackers are aware of a honeypot, they're going to do everything and use all their resources, time, money, etc., to figure out how to get that crypto. And it seems what they did through smart contracts, etc., on the Ethereum blockchain, ultimately hacking all the Ethereum. And rumors have circulated that the hackers have already sold a big portion of that and traded it for the only king crypto that exists, which is pretty little bitty. But that means not even the hackers want to hold Ethereum, ironic enough. But let's continue with the news. We got a jam-packed session here. El Salvador's buying more Bitcoin. Metaplanet's buying more Bitcoin. That's right, broskies. Metaplanet and El Salvador both stacked the biddy ahead of the crypto market slump on February 25th, with Bitcoin falling as much as 5% over 10 hours. Metaplanet said it bought 135 of the biddy for $13 million at around $96,000 per coin, while El Salvador, the stacking nation, purchased 7 Bitcoin on February 24th. And speaking of the 24th, right now it's 4:44. It's 4:44 p.m. here in Puerto Rico. Both came before Bitcoin fell below 91,000 in the early hours of February 25th. In fact, again, we touched 85, 86. Bitcoin has since rebounded to 92, though the crypto market sentiment has dropped to the lowest level in 5 months, which I share with you a little earlier. Now, Metaplanet noted that the Bitcoin yield, the period-to-period percentage change in the ratio between a company's Bitcoin holdings and its diluted shares, is up 23.3% this quarter, putting it on track to reach 35% target per quarter for quarter one. As they shared right here on X. Metaplanet is currently the 14th largest corporate Bitcoin hodler of the world, according to BitBo's BitcoinTreasuries.net. The company's latest purchase failed to boost Metaplanet's TYO share price on the Tokyo Stock Exchange, which has fallen 0.16% to 6,130 Japanese yen, which is roughly 41 USD, since the announcement was made during the February 25th lunch break. Meanwhile, El Salvador, which some people were questioning yesterday, JV, why'd they stop buying? Well, guess what? El Salvador's Bitcoin purchase was 6 more than its usual 1 biddy per day. According to the El Salvador National Bitcoin Office, they seized the opportunity and bought the dip. The purchase came about an hour before Trump confirmed America's plan to impose a 25% tax on imports from Canada and Mexico, still on schedule, and the crypto markets fell shortly after. The Central American country's latest purchase takes its total Bitcoin stash to 6,088 BTC, worth $560 million at this current time. El Salvador continued investment in Bitcoin comes as it agreed to pull back several Bitcoin policies as part of the $1.4 billion deal with the IMF. And ironic, that $1.4 billion looks familiar because there was just a $1.4 billion hack. You can't make this ish up. But nonetheless, family, follow the smart money. I'll give you some examples of the smart money. Wales, Bukele, El Salvador, Mikey Saylor, Kathy Wood, Stacey Herbert, Max Kaiser, and all the OGs. What are they doing? They're stacking like there ain't no tomorrow because it's going up forever, Laura. Believe it or not, SBF is back. That's right. He just made a tweet for the first time in 2 years as the FTT token was pumping. I highly doubt it's still pumping after the carnage, but here we go. FTT, the native token of the crypto exchange FTX, briefly spiked 30% as former FTX CEO Bankman-Fried posted on X for the first time in 2 years. I wonder who's holding this coin besides like a Kevin O'Leary. You know what I mean? Or maybe a Scaramucci. But in the first post since the beginning, being sentenced for 25 years behind bars over the FTX collapse, Bankman-Fried said on the post he had a lot of sympathy for the government employees because he hadn't checked his email in a few hundred days either. Quoting him here, firing people is one of the hardest things to do in the world. It sucks for everyone involved. More often, the problem is that the company just doesn't have the right job for them. I tell this to everyone we let go, that it was as much our fault for not having the right role for them or the right person to manage them or the right work environment for them. Sounds like he's just trying to like save face, right? The former FTX CEO was seemingly referring to the recent email campaign by Elon's Doge workers to respond with a list of what they had been working on in the past few weeks or lose their jobs. And despite having nothing to specifically do with the crypto exchange FTX, after the SBF post, FTT surged briefly from $1.63 to $2, 30% increase just from a single tweet. It's crazy. But it was a short-lived rally. FTT quickly retreated to $1.75. If someone can look it up right now, let me know where it's at. According to this article, when it was written, it was down over 97% from the all-time high of $85, which was achieved September 10th of 2021 before FTX collapsed in November of 2022. You know, they filed bankruptcy and all that. The last time Bankman-Fried posted was January 19th of 2023 about his drafted congressional testimony when the token price was $250. He also retweeted a post from lawyer James Murphy, January 20th, known online by his handle Meta Law Man. Murphy discussed how a judge refused to allow Daniel Friedberg, FTX's former chief regulatory officer, to testify through Zoom during the SBF trial. Bankman-Fried's criminal trial concluded November of 2023 2023, found guilty on 7 charges, including wire fraud, securities fraud, and commodities fraud. SBF received a sentence of 25 years behind the slammer. That was back on March of 28th, 2024. And I know currently his parents are trying to convince Trump to pardon him. And I pray he doesn't get pardoned, because he seems to be like a real criminal that actually deserves to be behind bars, and he has accepted no accountability. He is the only one out of all of the FTX executives that pleaded not guilty. Caroline Ellison, she's like, I'm guilty. Every single other person involved, I'm guilty, I'm guilty. Bankman-Fried, I didn't mean it, I'm not guilty. And the judge gave it to him. But he's lucky he only got 25 years behind prison, because let's keep it real. What's his name? Ross, he received 2 life sentences, and he didn't really even do anything. Whereas Bankman-Fried, it's very clear, was running an illegal exchange, and he was stealing all of your crypto proceeds. He was stealing your Bitcoin and returning FTT scam tokens in return. And when things didn't go well with his trading, the entire exchange collapsed, and everyone lost their money, over $10 billion in losses. I mean, you do the crime, you got to pay the time. Shout out all my sat stackers. Hell yeah, I'll get a black CNA hat. I mean, who wouldn't rock one of these babies? You just rock it. It's like fishing with dynamite. The broskies will be able to attract any bitty baddie that's ever been in existence. It's a guarantee. And not many things in life are guaranteed, except the Nippinator indicator and rocking the CNA cap. And that's it. It's like fishing with dynamite, broskies. I'm just saying. Just throwing it out there. All right. Next story, guys. Let's discuss the Ohio bill and then a very bearish call. Typically, our featured story is bullish, but fuck, the market's getting wrecked. So we got to keep it 100. This particular headline reads, Ohio introduces bill preventing state taxes on crypto payments. That's right, broskies. Lawmakers in the U.S. state of Ohio have introduced a bill that prohibits the state legislature from imposing taxes on digital assets when used as a payment method. It's the Ohio Bill 116, introduced February 24th by the Representative Steve, co-sponsored by Tex Fisher and Brian Lorenz. Let's go. It aims to amend existing legislation preventing municipalities from imposing extra taxes or fees on crypto assets beyond those applied to traditional fiat transactions, quoting them here. The General Assembly shall not enact a bill that proposes to impose a fee, tax, assessment, or other charge on digital assets used as a method of payment for goods and services. The bill defines digital assets as cryptocurrencies, stablecoins, and the non-fungible tokens. The bill clarifies that the taxes usually applied to the legal tender, such as state or sales taxes, would still apply to the crypto transactions, but there should be no new levies. The Ohio Blockchain Basics Act also stated that no state agency or political subdivision may prohibit individuals from accepting crypto assets as payments for goods and services. The bill also lets its residents retain the right to self-custody their digital assets using hardware or self-hosted wallets and partaking in the crypto staking. And additionally, activities such as mining, staking, exchanging, and crypto assets for the other crypto assets do not require money transmission licensing under the new existing Ohio laws. Individuals are also permitted to engage in crypto mining in residential areas if they comply with the local zoning regulations. Meanwhile, mining businesses are explicitly allowed in industrial zones and cannot be unfairly targeted by the local zoning changes put out there by those lizard folk. And under the proposed legislation change, Ohio state retirement funds will also be required to evaluate the potential risks and benefits of investing in the crypto ETF and report back to the General Assembly within the year. Ohio representatives have been proactive with this crypto-related bill in the recent months. For example, in September, Ohio senator introduced the bill requiring the state to accept crypto for payments of state taxes and fees. And then in December, Ohio House Republican leader Derek Merrin introduced the HB 703, aiming to establish a strategic Bitcoin reserve for the state. Meanwhile, Ohio Senator Sandra O'Brien introduced another bill in February to create the Ohio Bitcoin Reserve Fund with a 5-year holding period. Bitcoin Reserve bills, let's freaking go. And if you don't know, now you know, bro. Now for our feature story of the day. Bitcoin price could be headed for $70,000 in Goblin Town because of the ETF exodus, according to Just Blaze. Arthur Hayes. Let's break this down. And the reason I'm giving him clout here is because he's been the only one calling for 80,000 out of all the analysts I really follow and we cover on the show. And we almost hit 80,000 here today, and we're trending that ways. So we're going to entertain this analysis from Just Blaze, Arthur Hayes. But first, I want to read you this tweet from Ash Crypto because I agree. So you're telling me Bitcoin dumped more than 10,000 in 2 days without any major negative news. This is pure manipulation. And think about that for a second, because Bukele's buying, Metaplanet's buying, Michael Saylor just announced a $2 billion buy of 20,000 Bitcoin, and we're dumping 10,000. Doesn't add up. So he goes on to say, all these big freaking exchanges and market makers are liquidating the people and making millions of dollars with the volatility. A typical Wall Street playbook. And I couldn't agree more. And who would know better than someone from Wall Street? So let me know if you agree or disagree with that sentiment, but I definitely believe there's a lot of manipulation in the market. Back to the BitMEX founder, Just Blaze, Arthur Hayes, says that Bitcoin could potentially fall to 70 Gs if the large hedge funds unwind their positions. And who's the largest hedge funds out there? BlackRock. IBIT is the largest hodler of Bitcoin from the institutional FOMO like a mofo. So Bitcoin gobbling town is incoming, he said in a post, posting there could be a large outflow from the spot ETFs such as BlackRock's iShares Bitcoin Trust, better known as the IBIT. Lots of the IBIT hodlers are hedge funds that went long on ETFs while shorting the CME futures to earn low risk yield greater than that from the short-term US Treasuries. However, if that yield, called the basis spread, falls as the price of the BITI does, then these funds will sell the IBIT and buy back the CME futures. Hence, manipulation. These funds are currently in profit, and given that the basis spread is close to the Treasury yields, they will unwind during the U.S. hours and realize their profit, plunging Bitcoin back to 70 Gs. And here's the infamous X post, him calling it right there. And that was a post from today at 6:39 a.m. So in an investor note on February 23rd, we also have 10X research head Marcus Thielen has said a big part of the Bitcoin ETF demand is from the hedge funds playing this arbitrage game rather than the long-term hodlers. Precisely. This basis trade aims to capture the spread between the spot price of the Bitcoin tracked by the ETFs like IBIT and the BITI futures price on the CME. If Bitcoin price drops, the futures premium can also shrink, creating a problem for the hedge funds, which begin to unwind their trades by selling the preload BITI ETF shares and buying back the short CME futures. When this happens at scale, the coordinated unwind, aka manipulation, means major selling of the spot ETFs and upwards pressure on futures. This selling pressure exacerbates the Bitcoin price declines, potentially causing a feedback loop where more funds rush to exit their positions. Bitcoin plunged more than 5% over the past day, hitting an intraday low of 91, and we actually went a lot lower than that as the ETF outflows continue to accelerate. So I don't trust any of these ETFs. I don't trust BlackRock. I sure as hell don't trust Larry Fink. And going back to Max Kaiser, what he wrote here, the MAGA agenda means efficiency and accountability to an economy and stock market that is known neither for 45 fucking years. I'd expect a 66% pullback of the S&P 500 if Trump and Musk go full metal jacket on the fraud, the waste, and the abuse. Let me know if you agree or disagree with the high priest, the bishop of the Bitcoin. Holla. And welcome everyone to the Q&A segment of the live stream. We got 1,600 plus folks here. We got the Nippinator indicator live and in the flesh. And we got so much more. And we're going to premiere a brand new music video here shortly. And I'm going to stick around for an extra hour just to kick it with the homies. JV, Mr. V, Jock the what the who. I filmed my screen to prove it. The second time after catching it first, I bought 5,000 on Coinbase a few nights ago, and they had the price for the BITI on the site. It was the same price essentially when I looked at the receipt. Seems like more big money that comes in and the more shenanigans we'll see. I liked it better when Wall Street ignored the BITI instead of wanting to be the best friend. I feel you there on that, Daddy-O. A long-term perspective says buy here and keep waiting for the next discount.